Good evening, friends. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Now, standing today, which is 21st October 2019, practically at 2:30 in the morning, we are going to be shooting a pretty important video about a kind of, I don't say fraud, but a kind of a misinterpretation which is happening in the Singaporean market. Not only in the Singaporean market, but the worldwide market, and especially in the banking market. Now, when it comes to misinterpretation, I don't see this as a fraud, but eventually this will surely be end up as a fraud. Now, before sharing this video, I would like to give a definition of the fraud. According to me, a fraud is something that when you paid some amount to somebody and he not delivered, or maybe we agreed to have a flight from Singapore to Dubai, but what happened that we ended the flight at Singapore to Malaysia, basically less delivered until otherwise it is agreed, right? But in the banking sector, this fraud misinterpretation is happening almost every day in Singaporean market. I know I'm talking about Singapore. So I often talk about India, Reserve Bank of India, Security and Exchange Board of India, and the Indian regulators. And many people come to me and say that you talk less about Singapore. That is relatively very wrong, because I speak a lot about Singapore as well. Like from the last 6 months, I'm saying that Singapore as an economy is losing competitiveness, and that happened. Like last week, Honorable Prime Minister Lee acknowledged in the public domain, I think in one of the conferences, that the Singapore would grow by roughly 0 to 1% this year. So for the year 2019, the growth rate of the Singapore economy would be between 0 to 1%. And that's pretty sad. And Prime Minister said that that we hope that Singapore will not end up in a negative territory, which is maybe -0.5%, could be -1%. Because we need to appreciate that it is not the same Singapore which it was in 2008. It is not the same Singapore who used to be a derivative platform, who used to be a global market platform. It is considerably a very different Singapore we have nowadays. Now, when we talk about banks have one role to play, which is that taking deposits and giving you interest. Now, when we talk about Singapore dollar, definitely we are not talking about the negative carry like we have in the case of Swiss franc, NOK, Norwegian crown, Swedish krona, Swiss franc, CHF, euro, and probably GBP as well. But we are talking about Sing dollar, we are talking about positive carry. So let me take the example of our company, which is Treasury Consulting. We are holding 2 term deposits of good amount with the blessings of Lord with DBS. But the kind of interest we generate is pretty minimal. I think it is only satisfaction that I have made a term deposit. That's simple. Because in the checking account in Singapore, and in fact worldwide, you do not generate any interest. So you made some term deposits with DBS and you generate a very small interest in Singapore. If I would take this money to India, then I would generate, and especially in the mutual funds, because you know that Treasury Consulting LLP, which is an Indian entity holding funds with almost top 10 mutual funds of India, then we would generate not less than 7 to 8% return. But if I compare this in Singapore, it's less than 1.5% which we are generating. But I am a front office person, and I know that millions of people in Singapore, not only in Singapore, but different parts of the globe like US, Europe and all, they're being cheated. They're being cheated because one important thing which is not coming on the ground is that the capability of the front office instruments is not coming on the ground. And that's very unfortunate. And it's very unfortunate that even the regulators are not taking a concern. Now we hold this part of the story here, and let's move to the second part of the story. Few years before, Monetary Authority of Singapore took a very courageous call, and they decided let Singapore be the first place for DLC, daily leverage certificate. We have 1x till 7x. Basically, daily leverage certificate is a kind of instrument you do on a stock. There are specified stocks as per MAS. You can take a position in these stocks like DBS, UOB, and there are I think 7 to 8 such stocks. They keep updating these stock list. Now, if you think that during the day the DBS would decrease by 1%, take an example due to any reason, then and you take 2x DLC, then you will get 2%. Suppose it actually down by 1%, it down by 1.5, so you get 3. 1.5 into 2, 3. But what would if it go up by 1.5 and you take the down, which is a sell position, then you're gone. then you lose 3. Okay, this is DLC. If you do Googling, then you will get to know that Singapore, which is MAS, Singapore Stock Exchange, is the only stock exchange we have, at least in Asia, we can say, who offer DLC. So it was a courageous call. There is no doubt about that, and a very nice courageous call. But unfortunately, what happened that eventually you launched it. So launching is not everything. We need to appreciate that launching is definitely not everything. If you do something, you have to make sure that it reached to the crux. So they launched it, but they not been able to reach the best way of the DLC. Even today in Singapore, majority of the local investors or the retail investors, even company like me, right, we are staying away from DLC. DLC not yet for corporates, most important thing. And there is, I don't think there is any intent also for DLC to be for corporate. I understand that DLC is a double sword. This is part 2 of the game. Let's come to part 3 of the game. The part 3 of the game, the one instrument which most of the banks term this as a structured money market instrument. A very fancy word. Structured money market instrument, but actually or apparently speaking, it is not structured, right? It is a plain vanilla instrument. Like when I was learning FX, and you know that one of the best banks of the globe told me, they taught me FX, so I'm not being taught like an Indian trader who knows nothing. You can easily envisage from our videos, right? So when I was kid 21, 22, I asked him a question that what differentiates an exotic instrument from plain vanilla instrument? And I got a very right answer from that person. He said it depends upon the knowledge of that person who is asking or who is giving a reply. So for me, being working in a trader in a G7 bank, there is nothing plain vanilla. There is nothing exotic. Everything is plain vanilla. We have Bloomberg, we have almost all financial terminals, so we have no worry. While for many people, even forward contract is an exotic instrument, and that's right. If you look at India, then hardly 0.5% of the CFOs of India, which is so-called Chief Financial Officer, 0.5% of the so-called CFOs in India understand options. And if you think that Singaporean CFOs are very different, then you are wrong. Singaporean CFOs, it maximum 1%. In fact, you would be surprised to know that majority of the so-called startups, those who already taken a huge amount of funding, they do not have a proper CFO in place. Like in one of the cases, which is Honest B, media suggested that it was not having a proper CFO, rather the CEO was doing the role of a CFO. Now it is on the verge of the bankruptcy. They don't have money, and we already showed you the video in that regards. One important instrument which a customer should have on the road is the DCDs, which is dual currency deposit. Now, big banks, big boys, Goldman, JP, Citi, Standard Chartered, HSBC, ANZ, Westpac, BNP Paribas and all, they call the DCDs as exotic money market instrument. I agree, but not all. Because there are 6 types of DCDs which we have. 1, dual currency deposit, plain vanilla. It's not structured. Dual currency deposit, knock-in. Dual currency deposit, reverse knock-in. Dual currency deposit, knockout. Dual currency deposit, reverse knockout. Dual currency deposit, double knock-in. Double knockout. And most importantly, knock-in knockout. Here is again. I repeat. Dual currency deposit, plain vanilla. Dual currency deposit, knock-in. Reverse knock-in. Knockout. Reverse knockout. Double knock-in. Somebody can say reverse double knock-in. Double knockout. Reverse knockout. Reverse double knockout. Knock-in knockout. Do you understand that? I give you an example because you know that I am a number person. I talk numbers. I earned 1.4%, yes, if I'm not mistaken, on a considerable amount in Singapore. And if I would have taken that amount via a plain vanilla DCD, and I would have kept a strike rate of 1.48. But please be note that DCD, let me explain DCD again. The DCD means that you will take a call on the strike. So sitting today, when we're talking on 21st October, interbank Sing dollar market is 1.3695, so practically 1.37 you can say. I think that Sing dollar will go up it would surely depreciate. The matter of the fact is that Singapore economy is out of the hands now. I won't be surprised it will touch 1.4 before December as well. To be honest, and if the things would continue, it might touch down to 1.42 or 1.43 probably by March. But I hope that the government as well as the MS will take an action. Now, if I invest the same money and take a call that if the strike I have taken 1.48, with today it is 1.37, 1.48 means 11 big figures above from the strike, which is practically deep out of the money I am taking. And this is for 12 months. If after 12 months the strike, the spot of Sing dollar ends up having less than 1.48, it could be 1.47, 1.46, even 1 bips matter. Even 1 bips matter. But the cut you have to decide which cut you're going to be taking. But generally in Sing dollars we take Tokyo cut, right? Then I end up receiving roughly, if I have considered 1 million Sing dollar, I end up receiving 20,476 as an interest. So I end up receiving 1020476, so which is 2.04%. So my income would be 2.04%. And how much I am making right now? 1.4%. And how much is the spread? Approximately 67 bips. 67 bips. But the scene is more interesting. If the spot will go over 1.48, right, where the probability is high, then I would be receiving 51,304. Practically 51,300. So I end up receiving 5.1%. So today, if I have deposited this money with the DBS Raffles branch, I know that it is indifferent to the spot rate of the Sing dollar. Sing dollar is 1.37, it will go to 1.38, it will go to 1.39, it will go to anywhere, it doesn't make a difference. But if I take DCD and strike, I take 1.48, which is 11 big figures from the spot, which is completely out of the money, I would be receiving at least 2.04%, which is roughly 60 bips more. Right, and in the eventuality that it will cross 1.48, I would be receiving 5.1%. And more importantly, this is an American option. It's not an European option. It's an American option. And if you are thinking that I need to pay up a premium for that, the premium I have once price I have kept premium 0. That is the beauty of the game, and that is how the game should be. Now the moral of the story before winding up is that millions and millions of people in the Singapore and US and in some cases Europe also, they invest their money in term deposits with bank, maximum mutual funds, maximum ETFs, exchange traded funds, that's bond futures, maximum like that. Few smart people like us take punting in the euro dollar also. But banks never give you option for DCDs to the customers. I would like to challenge DBS, Piyush Gupta, CEO, UOB, OCBC, the 3 top banks of Singapore. Just go to any local branch and see that whether your local branch at Raffles Place or anywhere, they are even offering slightest of the education to the customers about the DCD. And I especially wanted to comment on the DBS that DBS has kept the buses red in Singapore. If you come to Singapore, you eventually find 2 different things nowadays. One is that a lot of SBS, which is state bus transport, state buses basically, a lot of SBS buses are red. This is DBS marketing. And rest are blue. This is Salesforce marketing. But none of these so-called rest buses, none of the ATMs by Singapore and none of the branches of the DBS, they will tell you that we have one instrument which is DCDs. And more importantly, please note that I have talked about only plain vanilla DCD. I have not talked about knock-in, reverse knock-in, knockout, reverse knockout, double knock-in, reverse double knock-in, double knockout, reverse double knockout, knock-in, knock-in. And more importantly, one thing which I wanted to introduce is, which is not on Reuters and Bloomberg, is the reverse DCD. Now what is reverse DCD? Did we ever thought about it? Did this media told about this? Did Piyush Gupta told about this? Did this so-called virtual bank told about this? And did your so-called certified financial analyst and FRM, Faltu Risk Management, told you about this? Did your so-called certified financial analyst and Faltu Risk Management is even talking about DCDs? Forget reverse DCDs. Now the reverse knock-in knockout DCD is we will bring into the system when we will get a virtual bank license. And what is that? Now assume for a minute, just assume for a minute. I need to wait for 1 year, or if not 1 year, at least during the year, to see that the strike shouldn't cross 1.48. Then I'll get that money. So ultimately the period I have to wait is 12 months, right? What would if I do not need to wait for that? And what would if the bank will come and based upon a probability of Sing dollar cross 1.48 in the 1 year, or it will less than 1.48, give me a bullet payment. He will say, okay, you give us 1 million, and we right now agree based upon the probability that on that probability the probability of Sing dollar hitting more than 1.48 is 60%. In that eventuality we will give you this, if it not we will give you this. So basically probabilistic assumption will come into picture, and that probabilistic assumption will come as per the model. And under these probabilistic assumption, the person knows that in these cases I will get, this is my payout, reverse DCDs. But my story has not yet ended. The reverse DCD means that he is able to draw the net income eventually before it matures. So within 12 months, he need not to take for the strike to go above or the strike to go down, but within 12 months, based upon the setup or the agreement, he can come to the branch and say that, boss, this was the delta I earned and this is how I want. So my net income was $51,000, give me 5,000 and rest is 46 something, I will take eventually. Reverse knock-in knockout. I would like to conclude this video with a small topic, with a small message. We tend to feel that the big banks, like in Singapore perspective, the DBS, UOB, OCBC, they are doing a wonderful job. Not many people think that majority of the buses in the Singapore is in red. I don't know what kind of marketing DBS is doing. We tend to believe that UOB, OCBC do not offer this product to the retail customers. Might be it is not good for retail customers. Because one thing which is surely we have nowadays is that the mind of the human being has stopped thinking. The counter argumentative cognitive, the counter argumentative ability of the human mind is zero when it comes to the financial instrument. So if I will make any political video, then everybody will start counter. So if I make a video who will win in 2020, the PAP or opposition, then I will get 20,000 views. But I know that if once I shoot this video, people don't reply. That doesn't matter. So what I wanted to let you know is that the banks we have in the world, they are not actually doing the job which they are supposed to do. The person or the retail investors, and in some cases the corporate also, either end up paying more interest rate or either end up receiving less interest rate, and the delta will go to the bank. This delta is not actually hitting the P&L of the bank, rather it hits the high bonuses and end up in the pocket of the CEOs and the CFOs. On the name of the marketing, a lot of being spent on the marketing about the digital wallet and so on and so forth, but very less education is being imparted in the system about these instruments. Before winding up this video, I would like to challenge the top 3 banks, which is DBS, OCBC and UOB, that you please show me one advertisement which you have shown in the public domain whereby you are giving the knowledge about DCDs to the general public in Singapore and pushing them, motivating them with the help of the regulator that you need to shift to DCDs or the OIS linked product rather than depositing your money in the form of term deposit. This is how the banking system governs. Now I end this video with one line and you answer, is it a fraud or misinterpretation? You take a call, you know my answer. For this, we thank you very much. You know my mobile number, which is +91 and Indian code 9899242978. You know our fixed income platform, www.fixedincome.global. Have a great time and talk soon.